This is the Tesla 1 month overview reading for the month of March 2024. It's currently January 30th, 2024, 6:23 p.m. Eastern Time. Tesla at the time of this reading is currently $191.59, that's USD. And the shuffle file for the March reading was created on January 8th, 2024 at 8:33 p.m. Eastern Time. That's this video here in the lower left corner. So the overall theme and behavior in March is a sideways fluctuating decline that precedes a rally. It's crossed with bearish price swings and a sharp drop. And that looks pretty accurate when we look at the March cluster as well. Behavior around the highest high, we have a rally into key resistance on a 1-year chart scale, and then we break down from that resistance with consecutively lower spikes up on the way down. And usually those spikes up will meet moving averages in bearish formation as their resistance levels. Behavior around the lowest low, out of a significant decline on a 1 month scale, there's a big move from the bottom of a range all the way to the top of a range. I'm seeing the similar kind of move from the bottom of a range to the top of a range in a lot of March readings at the very end of the month in the last week. And if you've never seen one of these SO meta-analysis pattern recognition markups, you don't really get it. It's okay, I'll explain. The two horizontal rows going left to right, the cards represent one trading day out of the month, and they're numbered. But what's important to understand is that there will be some cases, not all readings, but there will be a few, where you need to give the timing of the chart behavior plus or minus a day of wiggle room. And the reason for that is that not each card's energy is necessarily going to line up perfectly with 1 day of time. So in cases where that does happen, you need to give it plus or minus a day of wiggle room. Make sure to follow the sequence of chart events as outlined in the prediction, because that will keep you on track as far as where we are in this grand scheme of things. Now, before we get into the day-by-day chart behavior, as well as the timing of the highs and the lows, I want to make sure that everybody's aware, and then at the end of the video, I'm going to get into the timing of the highest highs and the lowest lows, but I want to make sure everybody's aware first. All right, guys, so on the first, we have an important support level on a multi-day scale that's highlighted. There's a significant cash-out opportunity there as well on like a multi-day swing trade kind of thing. There's also a day trade opportunity on there. I'll talk about it in more detail in the paid version, but what's notable is that there should be sideways fluctuating decline that precedes a rally, and there should be two local highs on a 1-day chart of the first, meaning that we'll see two local crests or peaks on the 1-day chart for March 1st. One of those peaks should be towards the end of the day. Notable drop over the weekend, and we attempt to establish support on the 4th at a prominent trough on a 1-month scale. The following day is pretty mixed. There might be some price swings here. Looks like we have a pretty big move to the upside early in the day on the 5th. There's a prominent trough there, and then we probably do some like back and forth, up and down kind of behavior, back and forth, ending it in a minor peak at the end of the day. So there should be a prominent trough and a prominent peak on the 5th. On the 6th, we have a decline increase that takes us to revisit a support level that's important on a 1-year chart scale minimum. It looks like that decline probably takes us into a trough early in the day on the 7th. I'm advised not to chase the trend. It's hard to determine if it's an upward trend or a downward trend right at the end of the day on the 6th. But what I can say is that you don't want to chase that trend. We open lower on the 7th most likely, and then there's pretty mixed day, but it looks like there's a range on a multi-day scale that's highlighted. It looks like a pretty hard mixed day, but there's a range there. I think that range is to the downside. On the 8th, we have a lot of price change covered. The Ace of Discs indicates a lot of price change. It indicates usually a significant trade opportunity, and also an important support on a multi-day scale. It's usually to the downside, but sometimes to the up. I think it's probably to the downside here. It looks like it's actually mixed. We start out to the downside and then end up to the upside. But a lot of price change covered. There's a day trade opportunity on the 8th. We're going to talk about in more detail in the paid version. And there's also a swing trade opportunity, and there are two local highs on a 1-day chart for the 8th as well. On the 11th, I'm advised to be very cautious there and not to do something impulsive. The prudence card indicates some sort of tricky chart behavior. Yeah, this might be like an intentional fake out or shakeout of some kind. And it looks like it's to the upside there. There's a prominent peak that we see on the 11th and a fake out there. So I would be careful not to like chase any rally on the 11th. Like it might look like we're going higher or something. On the cusp of the 11th, 12th, or on the morning of the 12th, there's a prominent trough again. We move higher out of that trough and through a key resistance on a multi-day scale there on the 12th, and then break back down through that same price level shortly thereafter with a full retracement. On the 13th, that decline continues. On the 14th, that decline continues. On the 15th, that decline continues. It looks like there's a prominent peak on the cusp of the 14th, 15th. That's a trade opportunity. I'll talk about in more detail in the paid version. All right, so on the 18th, there's an important price level highlighted on a 1-year chart scale minimum, usually acts as resistance. It's highlighted there. Yeah, it looks like we're bound by the upper end of a range on the 18th. That might even continue into the 19th. Might even continue into the 20th, actually. There's a lot of like resistance representatives there on the 18th, 19th, 20th, all representing resistance in a lot of cases. So maybe like multiple failed attempts over that 3-day period to break through a key resistance. Any like sharp declines there might actually offer an opportunity to open a position I'll talk about in more detail in the paid version. Matter of fact, before we go any further, let's take a look at January and see how we're doing. So it looks like we missed the highest high. It was here. There was a highest high here the day before. There was a trade opportunity on the 2nd to open up a short position, and then on the 3rd we have our first significant lowest low, followed by more decline the following day on the 4th, and then kind of mixed behavior there on the 5th. This is really solid. Then we come into a prominent peak on the 8th, which I had as a highest high. It ended up being a prominent peak, not a highest high. I'm not going to get them right all the time, but it's important that I show you guys how I can be wrong and still most of the reading is accurate. It's important so that you don't go trading like I'm right all the time, because it's so easy to do that, to think that I'm right all the time. I'm not, guys. This is a mostly accurate reading, but like I said, I got the high off. On the 8th, we have price swings. And there's that prominent peak, and then a failed attempt on the 9th, followed by decline to key support into another lowest low there on the 10th, and then an even lower one on the 11th. On the 16th, we have that failed attempt to break the resistance, followed by the decline through key support. into lower price levels on the 16th, 17th. This is super accurate, aside from missing the high by a week. And then we have a lowest low on the 23rd. Oh, well, by the way, there's this big drop here on the 24th, right? That's this pendulum indicating a sharp decline there, and we were off on the lowest low by 2 days. So even so, still pretty darn close, guys. And then the 25th ends up being the lowest low, and that's what often the science card will indicate is like an important high or an important low on a 1-year chart scale. Movement back to the upside on the 26th, a significant move higher on the 29th, right? So there was opportunity there on the 29th. Yeah, pretty nice opportunity there. And then we should have a higher price level tomorrow on the 31st. But this was super accurate, aside from being off just a little bit on the highest highs and the lowest lows. And why is that like not the biggest deal? Because if you followed along with the trades still would have made money, right? So here on the 4th, we have this opportunity to open up a long position, right? And you would have closed that long position on the 8th, 9th. That failed attempt to break the resistance. That would have paid off. You would have opened up a short position on the 9th, and you would have held that short position until the 11th. That would have been a really profitable trade. On the 16th, 17th, like you could have closed a short position there as well, or you could have waited until the 22nd, 23rd, I should say, and that would have been a solid gain, guys. We would have missed this drop here, unfortunately, but we're not going to get it every single time. And even with that said, those trades were still super profitable. I think there's probably one trade here at the very end that wouldn't have been profitable, but the majority of them, except for that one trade, would have been profitable. And the people that were utilizing this information, they were able to plan ahead as early as this reading was done October 25th, 2023 at 1:19 p.m. Eastern time. So they probably were able to see this as early as like late November, because they have a subscription on our website where you get all of the paid information. At the end of this video, if you've got the paid version, we talk about the timing of the best trades that we see. We talk about what type of chart behavior to look for as far as entry and exit into and out of those trades. We talk about any price level information that we're able to extrapolate. And we talk about the monthly reading fits in the larger scale, in the bigger readings, like we're in the pattern of the 2024 reading and the multi-year reading. Are we actually fitting based on cross-reading congruencies that we talk about? And then we even go through like the comparative performance of Tesla versus the S&P 500, all in the paid version. Definitely remember the names of everybody that does this, because they're the key supporters of the channel. You go to our website, chartfortraders.com, hover over our services, click on SO Meta Posts. Scroll down to monthly subscription, click here to order. You scroll down to Tesla, subscribe, $111. I mean, how much more money could you have made with those trades than $111? This is 98% accurate information month after month after month, found nowhere else on the planet. $111? It's a joke price. In any case, with that said, if you're interested in the paid version of more than just that, there's you can get the 30 days access to all paid. That gives you access to the paid version of all of these crypto symbols and tickers, as well as Amazon, Google, and Nvidia. Thank you to everybody that goes ahead and does that, and let's get back into it. This is interesting. So this science card here, it could be indicating that we're breaking through an important price level on a 1-year chart scale, or it could be indicating a bottom. It's possible that this is indicating a bottom because there's all this decline here. And then this could indicate like a bottom for the month. It's very possible. I'm not sure about it, but there's a possibility there. And the reason why I say that is because the low for the month of March is very likely going to be a lowest low for the year, at least thus far. On the 19th, we have that resistance. On the 20th, we have that resistance. There should be a lot of price change covered to the downside involved in that key resistance on the 20th. A lot of price change covered. And then on the 21st, sideways rotational on key support, and then a big move higher after establishing support. On the 22nd, erratic behavior back and forth through the same price level. In the midst of that erratic behavior, we should revisit a crest that was recently a past opportunity. It's probably a crest that we saw on the cusp of the 14th, 15th. And if not the 14th, 15th, then it's the crest from the 12th that we're revisiting. At the end of the day, there's that trade opportunity, and then a really big drop over the weekend into a prominent trough on a 1-month scale, and very likely a prominent trough on a 1-year scale as well. A peak and a trough there on the 25th. On the 26th, important resistance highlighted on a multi-day scale. We should flatten out around that price level. And day trade opportunity on the 27th, involving a U-shaped dip that forms near the intersection of two perpendicular diagonal trend lines. A sharp drop midday. On the 28th, 3 pokes through the same price level. A prominent peak, 3 pokes through the same price level, and a sharp drop off of that third price level. And then it looks like the first trading day of the following month, we probably have, out of a decline, we go from the bottom of a range to the top of a range. But I think we probably have a higher price level in April than we do in March. And that's Tesla for March 2024. Please subscribe if you haven't done so. It really helps out the channel. Most importantly, make sure to follow that rule of karma. We're counting on you here at Tarot for Traders. Blessings to all my angel investors. Stay tuned if you got the paid version. I'll see you guys on the next one. All right, guys, so we went from like the significant high on the cusp of the year after this rally increasing with momentum, right? And then it turns into a crest that we sell off from pretty notably into the later part. Near the lows, we should see price swings. This is also cross-reading congruency with the 2024 card, so that's important to point out. We should see some pretty significant price swings, indicating that the low in March could very likely be the same low that we've seen in January. Let me see. Yeah, it looks like the low in March is the same low that we have in January, right? So roughly around the same price level as the January low, and then it looks like there's this big pop to the upside, and then we probably go into a higher price level than the highs that we've seen thus far. Let me see if it's higher. No, it's the same high. It's the same high there in April that we've already seen back in like January and probably February. So as far as the 1 month, there isn't really any like super relevant trades here. But you could trade it because it's the art card, so when we hit the low, you could utilize the low as an exit point for when we move to the upside. We around the cusp here in early April. Matter of fact, the April and the March and April low might be very close, like, to each other in time. In any case, there's a lot of bullish energy in April, so I would look for opportunity, that bullish energy, to open up a short and to exit out of at the same price level as the low of March. We'd see it somewhere here in May, very likely April or May. The best trade on a 1 month standpoint, I would say here on the first, you want to take profits on long positions. I would open up a partial short here. There's a couple places where I would open up a partial short. I would open up a partial short here on the first. You could close it on the 7th, or you could hold it and add to it possibly at the end of the day on the 7th, or possibly on the 8th, but very, very likely you would want to add to it on the 11th, 12th. It might be that it looks like we're going to break through the highs of earlier in the month. Either way, here there might be opportunity to add to on the 11th, 12th, probably the 12th. And then we likely have a very sharp decline here on the 13th, 14th, 15th. I'm seeing that in a lot of readings. You would close out of the shorts here if you wanted, or you could risk holding it to the 20th, or you could risk holding it to the 25th, where I see this being probably the lowest low for the month. The highest highs here on the first, lowest lows here on the 25th. So this U-shaped dip in the beginning of the day, if we're at a peak on the 27th, you could open up a short in the midst of a decline that is pretty sharp midday. In the midst of the midday sharp decline, you could close a short, or better yet, don't open the short, wait for that sharp decline midday, open a long and close the long at the end of the day when we're back at roughly the same price levels as the peak that we fell from at the beginning of the day. U-shaped dip with two peaks on either side. But yeah, from a swing trade, the Empress card actually indicates that we want to be looking to open up long positions here, and that would make sense because we're near lowest low. So I would say here on the 25th, for a multi-day swing trade, you probably want to open up a long. You might open up a partial long on the 18th, a partial long on the 20th, and complete it on the 25th. And then you would close it at the same price level as the highs of February. As far as the overall performance of Tesla versus the S&P 500, and you can see how they follow similar patterns. Pretty sharp unicursal hexagram drop here in the second week. We have highs at the beginning of the month, possibly highs again in the second week, but a sharp drop off of it into lows around the third week, and maybe on the 25th as well, although I think we're probably moving higher by that point on the S&P. So which one outperforms? Tesla outperforms. And that's the paid version of Tesla for March 2024. Thank you so much for supporting the channel. Without you, we would not be able to put out this content. So much appreciation and love goes out to you. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one.